Can you just explain this musical chairs thing that we have going on right now?
I can do my best. It's kind of crazy. The best way of explaining it is that anything can still happen in this space. You've got 5 companies. You haven't had any consolidation as yet. There's been speculation for years now that we're going to see some kind of merger here. There's in reality, maybe 1 or 2 deals left that can happen, probably one big one. So what's going on here? Everyone is looking at everyone else. It's like a staring match where everyone has a compound eye.
Well, who's missing, though? You said that there were 5. We only have 4 potential players in this roundabout.
Right. So United are the kind of $113 billion gorilla in the room or whatever now, or elephant in the room, sorry. It's more complicated than they could play in this. They are restricted in terms of really upping their exposure to Medicare and Medicaid, so they would not be able to go after Humana. I think they would also probably struggle going after Anthem. But they could potentially come in and buy any of the other 3. So they're there. The others are all looking at each other. The one thing that can't happen is no one can buy United because they're so much bigger.
Fair. So we have here Humana is sort of really attractive for Aetna and Cigna. Cigna is attractive for Anthem. Why the consolidation now? What do they need from each other?
I think 2 things. One is everyone else is consolidating across the healthcare industry, which obviously means that they being looked at by their investors as, why aren't you guys doing deals? It's a great environment to do deals. We've seen this again and again. People being rewarded, very cheap debt, so everyone wants to do deals. I think the other thing that's going on here is Obamacare has changed the landscape for health insurers. So if you are a health insurer like Aetna, like Cigna, where you have very good exposure to the private sector, so essentially your business is driven by, people who work in companies like us. Our companies pay for our insurance and they're receiving that. But what they don't have any exposure to is the public sector. So they don't have anything in Medicaid, they don't have anything in Medicare, and Obamacare has made that a much bigger part of the market. So the way they get that, they go out and they acquire someone who does, like Humana.
Does this also point to potentially that enrollment due to the Affordable Health Care Act is kind of at its max or sort of stagnating? So now it's about cost cutting. Now it's about scale, kind of the next growth in the industry.
I think it's exactly that. I think, look, they've done what they can with the Affordable Care Act. So it's about the cost cutting. It's about how do they get scale. But it's also this. When that came in, there was inevitably going to be a period of time where everyone waited to see how does this affect my business? What does this mean for me? What do I have to do to change, to adapt, to become good in this new world, new environment? I think they've done that now. I think we've reached the point where everyone has logically figured out how they do business. And so what do? Inevitably, they start looking on the front foot and going for deals.
And what about premiums? I mean, we've seen premiums sort of soar for deals just this year. I'm just looking at the terminal, $2.4 trillion in potential deals. What kind of premiums can these guys expect to pay?
I think fairly healthy ones. I mean, we've seen the shares obviously run up. On today's news, we saw 2 weeks ago when the original speculation was out about Humana kind of putting itself up for sale and inviting some interest, we saw the shares run up then. Look, I think everything in this market is getting kind of 20–30% premiums, and I think that's normal. We've seen bigger stuff. We saw today this deal in this sort of auto industry space where the premium was, I think, 57–58%, which is,
And what's also interesting is one of the other deals for today was CVS buying Target's pharmacy business, and what's striking there is that the buyer's up. CVS stock is up, a sort of trend that we've seen. The home builders was the same way. How unusual is that, and what does that wind up saying about the environment?
It's one of these things where we've been saying it's nuts and it's unusual for 2 years. So I guess there has to come a point where we stop saying it's nuts and we stop saying it's unusual and we accept that it is kind of a new norm. So investors love deals at the moment, and they love companies doing deals. And when companies do deals, they reward them by giving their stock a pop. We saw actually another deal today, Hudson's Bay buying a German shopping mall company. Their stock popped about 13–14%, like on the news. So it almost seems, irrespective of the sector, the kind of deal, and to some extent the premium paid, you're seeing this amazing reaction on the part of the acquirer.
What kind of termination fees do we wind up seeing, and sort of what does that wind up telling us?
We're seeing some quite hefty ones. So we're seeing, particularly on the kind of antitrust stuff, where obviously people are worried because we've seen regulators blow up a few deals recently. Obviously, the best example perhaps being the Comcast-Time Warner merger that fell apart sort of earlier this year. And I think because of that, people, if they are going into deals, they're asking for very big reverse break fees, on the antitrust. We're seeing it now with Syngenta asking Monsanto, obviously, for a much larger break fee than what has been offered. I don't think across the piece, I don't think we're seeing kind of historically unusual break fees, but I do think there's this interesting thing going on where there's so much M&A, there's so much appetite from companies to do deals, that if you're a company and you're saying, well, OK, I'll put myself into play with you and we'll try and get this done, in doing that, you're effectively taking yourself out of the market where someone else could buy you. So you're like, if I'm going to take that risk in such a buoyant M&A market, I want something to back it up. I want some money in case it all goes wrong.
So what do you think is the one deal that's going to go through in the health insurance industry? Crystal ball it for us. Talk to your sources.
I wish my crystal ball were that good. I think, you know, it really is one of these ones at the moment where any call I make, I'm going to look like an idiot down the line, because anything could happen in this space. They are all looking at each other. They are all playing this very tactical, very clever game. You know, one thing that was suggested to me this afternoon, which is fascinating, is, you know, has this news come out about Cigna being a target for Anthem because that makes Cigna less likely bidder for Humana, and therefore it benefits Anthem trying to buy Humana? It's like, you know, layers upon layers upon layers of complication in this. But look, I think the one thing we can say for sure, we will see a deal in this space within the next few months, and it will be very big.